You might not have heard of BlackRock, but it's controlling your money. This company manages a staggering $10 trillion in assets. That's more than the GDP of every country except the US and China. BlackRock has its fingers in nearly every pie of the global economy. From your retirement savings to government bonds, BlackRock is there, pulling strings behind the scenes. But what makes BlackRock so dangerous? It's not just its size, it's the power that comes with it. Imagine a company so big, it can influence entire economies. A company that can make or break businesses with a single decision. That's BlackRock. It's not a bank, not a hedge fund, but something far more powerful and far less regulated. As we delve deeper into BlackRock's operations, you'll see why this financial behemoth might be the most dangerous company in the world. BlackRock can be considered one of the largest and most powerful financial companies in the world, and it is one of the largest companies in the field of asset management. BlackRock was founded in 1988 and is headquartered in New York City. The company has a global presence and operates in a wide range of financial markets around the world. It provides investment portfolios and traded investment funds across various financial markets, and also allows investors to access specialized financial advice services. BlackRock is also one of the leading companies in the field of investment technology. It uses artificial intelligence and machine learning techniques to analyze financial data and make accurate investment decisions. Before we talk about this company, you must know the size of the richest people in the world in relation to this company. BlackRock company, Elon Musk, founder and CEO of Tesla, SpaceX, and other companies. He is the richest man in the world with a net worth exceeding $270 billion. He also lost part of his wealth, which exceeded $300 billion in October 2021. In second place is Bernard Arnault, the famous French billionaire whose net worth is estimated at $160 billion. In the third place is Jeff Bezos, owner of Amazon, whose net worth is estimated at $159 billion. Mark Zuckerberg, owner of Meta, currently owns a group of the most important applications and social networking sites. The most famous are Facebook and WhatsApp, and we can consider him a not-so-rich person because his net worth is $60 billion. That's why he's currently ranked number 16. But for now, let's forget about them at all. Lawrence Fink, known as Larry Fink, CEO of a giant entity called BlackRock. Although this man's personal net worth is not comparable to the rich people in the world that we mentioned at the beginning of the video, he controls, through BlackRock and the company's board of directors, money that exceeds the sum of the net worth of all the rich people in the world. It is worth putting together many times over. In fact, we are talking about an unprecedented level of numbers that make the net worth of someone like Elon Musk resemble pocket money in comparison. It is a level of numbers that does not exceed the wealth of just any person, no matter what. But it exceeds the gross domestic product of any country in the world, with the exception of only two countries, the United States and China. Pay attention to what his net worth is. At the beginning of 2024, BlackRock reached $10 trillion in assets, 1 and 13 zeros to its right. This is nearly 40 times the current total of Elon Musk's wealth, and more than 10% of the total global product of all countries in the world combined. Who is Larry Fink? What is the BlackRock company that he managed? And what is meant by asset management business as well? How was it able to manage such enormous wealth and assets, and what is the extent of the company's influence on global politics, and the United States in particular? Before we know the strange story of BlackRock, we must know what is meant by the term asset management. Asset management is the process of increasing wealth over time by investing it in a way that maintains its value. So, who does such a thing? They are the individuals and institutions specialized in managing these assets, any party that has financial liquidity, even a government agency that has funds for retirement, for example, or even an insurance company or other institutions that have financial surpluses and want to invest them in the correct way. They contract with asset management companies to invest their money with them. There are many options for investment, such as stocks, bonds, real estate, commodities, mutual funds, alternative investments, and others. Now I will talk about the life of the most dangerous man in the world without exaggeration. Larry Fink was born in November 1952 in the San Fernando Valley, California, United States of America. His father owned a shoe store and his mother was an English teacher. Unlike his older brother, Larry was not a nerd, so he worked early with his father. After graduating from the University of California, he worked for a short period in real estate until he obtained a Master of Business Administration from the same university, then headed to Wall Street. He tried to work at Goldman, but he did not pass the final interview with the bank. In 1976, he decided to join First Boston. It is an asset management company. He initially worked in the bond trading department. Because he had experience in the real estate field, he mainly traded mortgage-backed securities. He had a unique talent in trading and asset management, and in just 2 years his fame increased dramatically, and he formed a strong and hardworking team in the company. Most of them were Jews. That's why they contacted Larry's office at Little Israel. Within a few years, Larry became the youngest managing director in First Boston's history at 31 years old, and was the youngest member of the company's management committee. It was a star twinkling in the sky. But suddenly, everything changed in 1986 when his corporate office lost $100 million after interest rates dropped unexpectedly, and there were no precautions against this scenario. Despite the huge profits he had made for the company in the years before that, he went from CEO in waiting to a pariah of all companies and banks until he resigned from the company in 1988. Days after his resignation, he met with a group of his peers, friends who are true asset management and mortgage nerds. Larry was thinking of an entity that pooled securities in a portfolio and carefully analyzed their risks. And after the meeting, they decided to create a new bond investment company based on modern technology and risk management. They founded the company that was later renamed BlackRock. The company's strategy was initially very simple, which was to create a fund based on investments that generated a fixed income. Instead, other investment funds' returns came through short-term investments and operations. They decided to limit trading operations and adopt the well-known strategy of buying assets and holding them for a long time, or the so-called buy and hold. That is, investing in safe assets that generate almost constant returns with the guarantee that the value will multiply over time. At this moment, the company had two important people: Ben Golub, the math wizard who designed many of the risk management tools at Larry Fink's old company First Boston, and his colleague Charlie. Their mission was to develop a technology that links financial markets and computing power so that you can predict the risks of investing in securities. This piece of innovation was a financial revolution on Wall Street. The famous financial services company Blackstone agreed to finance the new project with $5 million in exchange for 50% of its shares. Immediately, Fink and his friends began working on the most important component of their new company, which would analyze indicators and risks and make investment decisions automatically. They called it the Assets, Liabilities, Debts, and Derivative Investing Network. Yes, I know it's a long name, but it's the abbreviation by which it's known on Wall Street. Aladdin, and the genie of the lamp. Yes, the long initials are in front of you. What does this Aladdin bring? Well, in short, it's a massive network of 5,000 super powerful computers that collect data from all markets and all companies and assets, and use machine learning to execute 250,000 trades per day. Each trade with great accuracy within roughly milliseconds. In short, we can consider the Aladdin network as a complete nervous system, not only for BlackRock but for all asset managers on Wall Street, as we will explain later. In fact, the network's naming of Aladdin was so successful, it actually turned into a veritable Aladdin's lamp for BlackRock on Wall Street. Suffice it to say that in just 6 years since its inception, the size of the asset portfolio managed by BlackRock has reached $23 billion. It had 150 employees, and it could not be a subsidiary of Blackstone anymore, so it abandoned it in the mid-1990s and entered its first public offering on the stock exchange in 1999. At this moment, it was managing assets worth more than $156 billion. This was all before the real leap in the company's career took place. We're talking about two major, harsh crises that shook the entire world, but were a blessing for BlackRock. The first crisis occurred at the beginning of the millennium and was known as the bursting of the dot-com bubble. The major collapse that affected the most important technology companies. It prompted investors to resort to maintaining stability and avoiding risks by searching for stable profits even if they were small. However, that turbulent period removed BlackRock's biggest competitor from the market. It also gave the company an invaluable opportunity to take on some of its most prominent competitors and transform from a successful bond investment company into the largest financial asset manager in the world. One of the most significant acquisitions took place in 2006, when BlackRock acquired the entire investment assets of Merrill Lynch, the finance giant, which was in deep distress at the time, in a $9.7 billion deal. This deal alone brought the value of assets managed by BlackRock to $1 trillion. In 2009, BlackRock concluded the most important deal in its history, known as the deal of the century on Wall Street, by acquiring Barclays Global Investors, the huge investment arm of British bank Barclays, owner of iShares funds, in a deal worth $13.5 billion. Today, iShares is a world-famous brand and is the largest and most important index fund issuer in the world. Does the company stop there? Of course not. The second golden moment came with the global financial crisis of 2008. At that time, almost all businessmen and financiers in America and Europe turned to BlackRock and Aladdin. We are talking about the major US banks and even the Federal Reserve and the US Treasury. And so BlackRock suddenly became the engine of financial policies in America and even in Europe. Simply put, governments were turning to Aladdin to decide which assets to keep and what to sell. The platform was tasked with deciding on the $2 trillion that was printed in the wake of the crisis, most of which was allocated to bonds, and financing to support mortgage companies and banks, assets in which BlackRock was already investing. So the company made huge profits. The success of the Aladdin network protected the US market from a complete collapse during the financial crisis that caused two major reversals in the course of BlackRock and Wall Street, perhaps in the United States and the entire financial system. The first shift was to promote the shift of almost the entire asset management market towards index funds, ETFs, and away from traditional active funds. Over the past decade, more than 80% of asset investing has been through index funds. This huge share is dominated by three companies currently called the Big Three on Wall Street, led by BlackRock with a share of close to 40%, and Vanguard Company with about 19.5%, and finally State Street Company with 12.5%. Controlling 40% of such a huge market is not easy at all. However, the surprise is not here. The surprise is that even the two competing companies, Vanguard and State Street, are based on BlackRock's Aladdin platform. Half of the world's 10 largest insurance companies do the same. In addition to a number of major pension funds such as the $1.5 trillion Japanese government pension fund, and a group of technology giants such as Apple, Microsoft, and Alphabet, the parent company of Google. It should be noted that these are the three largest US companies listed on the stock exchange in terms of market capitalization and have billions of dollars in their investment portfolios, and many more. In this way, the volume of assets managed through the Aladdin platform is approaching $22 trillion. It is slightly less than a quarter of the gross domestic product of the world's countries combined. Well, that's the first transformation. What's the second transformation? The second and most important transformation caused by the global financial crisis is that BlackRock has gained a prominent position among governments and international bodies, pushing it to a new stage. You are no longer just an asset manager for large companies, but also a manager. From government investments and major sovereign wealth funds, including the Norwegian State Pension Fund, which ranks as the largest sovereign fund in the world, and it has become quite common to see Larry Fink meeting with the director of the International Monetary Fund, or with the president of a large European country such as Emmanuel Macron, or any senior official in any country. Things have gone too far in the United States itself. President Joe Biden's administration has almost decided to rely on former BlackRock executives in a lot of important economic positions, like Brian Dees, the former chief investment officer at BlackRock who leads Biden's National Economic Council and serves as his economic advisor. Wally Adeyemo, the Deputy Secretary of the Treasury who was Larry Fink's own Chief of Staff. So is Mike Pyle, the former Chief Strategist at BlackRock, now an economic advisor to Vice President Kamala Harris. It is needless to clarify that this influence is not limited to the Biden administration. BlackRock has cooperated with all US governments since the time of the financial crisis, from Obama to Trump. During the latter era in particular, BlackRock's Financial Markets Advisory Unit, known by its acronym FMA, played a role. An important role in the US government's response to COVID-19. In March 2020, the US Federal Reserve selected it to run a massive emergency asset purchase program to hedge against the crisis. Here comes the last question, and perhaps the most important in the topic. If a company managing $10 trillion in assets had a digital platform used to manage the equivalent of a quarter of global GDP, its managers work in prominent positions. The American administration and its president have opened a hotline with the heads of the world's largest countries and international financial institutions. Wouldn't it be the shadow government that controls the world economically behind the scenes? Let's confirm that this theory is so popular that if you try to search BlackRock on Google and YouTube, most of the headlines you see will be something like, "The company that rules the world," and "The corporation that controls the economy behind the scenes." Bloomberg itself described BlackRock as the fourth branch of government because of its close relationship with the U.S. Central Bank and Federal Reserve, in addition to its impact on the American system, which we talked about a little since the period. But the problem is that this theory is exaggerated. As you know, the idea of a hidden entity controlling the world is one of the most common ideas among people, and it is an idea that has stuck with many entities like Bilderberg, Group Paris Club, and currently BlackRock. Certainly enhancing the popularity of the theory is that BlackRock, along with Vanguard and State Street, it holds a huge stake in most of the global giants. We are talking here about almost every type and category of company, from technology companies like Apple, Google, Microsoft, Tesla, and Amazon, to oil and energy companies like ExxonMobil, to beverage companies like Pepsi and Coca-Cola, and even major media companies like Comcast, Disney, Sky Media, CNN, and airlines like Delta and American Airlines, and even banks and financial institutions like JP Morgan, Citigroup, and Bank of America. If we take a look at the list of those who own these companies, we will often find that BlackRock is among the top 3 or 5 owners at least. Isn't there a trick? The idea is that we are talking about an asset management company that manages trillions of dollars in investments. So it is natural that the company would pump investors' money into almost all profitable companies on the market. Because they invest on behalf of large corporations, funds, and sometimes government agencies, their holding ratios naturally reflect the strong portfolios of their clients. What we need to say here is that BlackRock and similar companies are not the real owners of these shares, but the investors on whose behalf the company manages the assets. The irony is that investors are often the same large companies such as Apple, Google, JP Morgan, and others. It's like intersecting circles. These companies operate and generate financial surpluses that they give to a company like BlackRock to invest in the stock market in the same shares of those companies. For example, we found that Google indirectly invests in Microsoft, Pepsi invests in Coca-Cola, etc. This enormous power gives BlackRock, for example, voting rights and influence on the boards of directors of most of the world's largest companies. And significant and unprecedented financing controls can be used to pressure these companies to adopt certain views, as well as the impact on countries and governments that will be interested in protecting the interests of their companies and investment assets. All this, and we have not yet talked about the small but existing possibility of hacking a system like Aladdin, which could have a catastrophic and devastating impact on the global economy.